Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX, and it's about 8:51 a.m. on Friday, June 27th, as we approach the end of the month and the end of the fiscal quarter and the end of the half year, so to speak. It's amazing that 2025 is nearly half over as we go into the weekend now. They'll come back for the June 30th USDA quarterly stocks and grains reports on Monday, which are known for their market moving surprises. And that's perhaps one of the reasons why we're seeing the grain and oilseeds take quite a bounce overnight. These markets had largely been oversold. And when you're approaching reports that are known for their surprises, that starts to make traders a little bit nervous. End users start to say, maybe there's a little more upside risk at these price levels than downside. Maybe I should get some coverage. Speculators who have profits in the short positions have similar thoughts, and so you get a little bit of bounce. And we're seeing a higher crude oil market as well, and that's been developing through the week. We saw the collapse in crude oil early in the week, taking us down toward that $64 level after peaking Sunday night at $78, but finding support there, which was kind of the top of the range for the previous few months prior to the 12-day war breaking out in the Middle East, as the market is now starting to focus on some emerging demand factors that suggest maybe demand is going to be a little bit stronger than expected. Now, as we start trade today, we're also seeing a couple of the major stock indices trade to all-time record highs. And that momentum is getting a boost also from signs that the economy is resilient and doing relatively well as we continue to be in the midst of this trade war that President Trump has brought on us, particularly with the reciprocal tariffs. Now, we're approaching the end of the 90-day rollback of those reciprocal tariffs, which still leave a base 10% tariff on everybody. The end of that comes on July 8th, so we could see some increased volatility going forward. But we do have some news on that front that I think is highly significant this morning that I wanted to talk to you about. First of all, we had news break overnight that the United States and China have reached an agreement, another trade deal, another in a series of deals. This one seems to focus on rare earth minerals. And I've been talking about the fact that the rare earth minerals are the new leverage factor that China is utilizing in order to get favorable treatment in these deals. Now, as we look at the deal, the details are lacking. Let's back up a little bit and let's give a little bit of background. Over the years, as rare earth minerals have taken on importance in the world economy, they're essential. Rare earth minerals and magnets are essential for the development of our electronics-based economy, global economy. So basically all things electronics, and that includes everything from cars to phones, to televisions, anything that has these high-tech type of electronics in them, find a need for rare earth minerals. That also includes military weaponry. Now, during the 12-day war in the Middle East, Israeli weaponry and U.S. weaponry, particularly last weekend, was really on display for how impressive it performed in many different ways and brought a relatively quick end to this 12-day war. One of the essential components, though, in those electronics that drive these weapons are rare earth minerals. Now, over the years, as the rare earth industry has developed, most of the world has felt like that's too dirty of an industry. And for environmental reasons, we don't want to deal with it. So they've allowed China to deal with it. And China is now in control of roughly 90% of the rare earth mineral mining and processing. And so that's via that, they control the rare earth minerals that go out to the world. And they've started to limit what they disseminate to the rest of the world. It's not just the United States, it's to the rest of the world as well. And so when the United States got in its trade spat with China and with the rest of the world, Xi Jinping, president of China, saw this as a leverage tool. Now, he was already starting to really restrict rare earth minerals, but he tightened the screws a little bit more. And so we got to the point in May where the production of some auto lines it was basically on the cusp of coming to a halt, a screeching halt, because of the lack of these rare earth minerals and magnets. And so we had the agreement in Geneva in mid-May that to allow these rare earth minerals to flow again to the auto industry. And industry sources are saying it was just a 6-month agreement. So it was just a partial agreement, partial solving of the problem. China was still in control on the rare earth minerals for the most part. Now, don't expect us to ever advertise that we're bringing to a halt our production of defense weapons because of absence of rare earth minerals. For national security reasons, the United States is not going to publicize that. But China was really controlling where the rare earth minerals went, requiring extensive documentation on who was using it, how it was being used, etc., trying to control where it went, not really wanting to see those rare earth minerals go to the U.S. defense weaponry production. So what are the details of this agreement now, which according to both sides, they've confirmed that it's been reached, and apparently it happened earlier this week, 2 or 3 days ago. And Howard Lutnick, who is a Commerce Secretary for the United States, has confirmed that we agreed to lift some restrictions while China, some countermeasures, while China lifts the restrictions on rare earth minerals. We don't know to what degree those restrictions on rare earth minerals have been lifted. We don't know the details of the countermeasure lifted by the United States. What this tells me is it was probably we're going to free up more semiconductors and other electronics that China needs for its industrial military development that come from the United States in return for them lifting restrictions on rare earth minerals. But that's speculation on my part. The fact that they're not giving the details and the fact that we didn't see President Trump boasting about the agreement, which is part of his personality to do so, tells me that we probably saw both sides giving up what they really don't want publicized that they gave up, but they saw essential for moving forward. And so we do move forward now. Wall Street is interpreting this that if we can reach an agreement on rare earth minerals, not knowing the details, then more agreements are possible. And I think one of the big takeaways is 2 points. Is one, we can reach agreements with China, but 2, we've got a long ways to go. It's going to be a long process to address all of the issues that are between the United States and China, between these two superpowers. Now, I should mention also part of what China also agreed to was to cooperate with the United States in restricting the flow of fentanyl and fentanyl components to the United States. We've heard this before. We'll have to see actions on it. Remember, part of the tariff package still in place is 20% is assigned specifically due to China's part in the fentanyl flowing to the United States, fentanyl and its components flowing to the United States. If President Trump is satisfied that they are stopping the flow of these components, then that 20% could come off at any point, and that would also be a big positive. Now, we did see in USDA's weekly export sales report this week that there was a cargo of U.S. grain sorghum that went to China. That hasn't happened in a long time of any significance. We have also seen some pork start to slowly go back to China once again. We're not seeing any grain and oilseeds flow to China at this point. As we get over the next month, typically China would be buying a lot of U.S. soybeans for fourth quarter delivery into China as we're harvesting our new crop. And so it's going to start becoming more and more of a factor that soybean traders are monitoring whether that happens. China could waive those tariffs, or they could simply lean on their reserves, or their state buying agency, which is essentially be paying itself their retaliatory tariffs, could buy the soybeans and pay themselves the tariffs and put the soybeans in reserve and then auction them off to the crushers. So there's a number of things that could be happen, but the bottom line is soybean traders are going to need to see that flow, that those sales, those commitments of soybeans for the fall, or we're going to see a collapse of export expectations, particularly since the Brazil and Argentine crops are already harvested and they were big. So we move forward. We have an agreement. For today, the equity markets are soaring new record highs in the midst of this. Now, I want to throw out one more component. I mentioned that we're nearing the end of the 90-day pause in the reciprocal tariffs for everybody but China. China's 90 days expires on August 12th. For everybody else, it's July 8th. We're seeing a resilient economy. Are there problems? Yeah, there are some problems, but overall, we're seeing a resilient economy. The PCE inflation data that came out this morning shows very, very tiny upticks in inflation. It is trending higher. The June data, that was for May, the June data will probably do the same. But we're not seeing it explode higher like many had feared that it would. The biggest thing holding back both the consumer and businesses from investing in the future, making big purchases, etc., has been the uncertainty of the tariff war. So this isn't something I'm advocating, but what if this is President Trump's plan? What if his plan is to extend that 90-day pause for a year? That would remove the uncertainty. And then if the Senate and the House pass this tax bill that has business tax incentives in it for investment and for growth in it, you've removed the uncertainty. President Trump gets his revenue that he likes. You can argue whether that's good or bad in tariffs. That's not my point. I'm saying, what if this is his plan? He gets the $400 billion in tax revenue a year that he likes. It goes against the deficit. Gets the economic growth. We don't have explosive inflation. It's rather modest because the markets already learned to live with that. What if that's his plan? Now, the White House is saying this morning that we're very close to reaching agreements with 10 other countries. We've heard similar things before over the past couple of months. Is that going to happen or not? We don't know. India has been mentioned specifically, and that would be a significant trading partner. We'd also like to see one with Japan, South Korea. But these are things to watch. Big trade agreements, maybe a pause for a year while they continue to work on more trade agreements with other countries, but we leave the 10% baseline in place that the economy has learned to absorb, and we continue to make incremental progress with China, and we start to remove much of the uncertainty that's been holding back business investment and consumer spending. Keep that in mind. It's a weekend coming up. I hope you have a good weekend. It's the end of the month and the end of the fiscal quarter coming up. If you like what you've heard, like and subscribe to continue to get these updates from the trading floor. Have a good weekend.